this is property, plant, and equipment where you have to prepare a non-current asset schedule. Okay.
Hmm.
This sum has come in May-June 2024, paper 31.
Yeah.
So what do they want from you is they want you to prepare the cost section and the cumulated depreciation section of GPLC's schedule of non-current assets. So when I'm
Yeah.
talking about schedule of non-current assets, our non-current assets is divided into two parts. The first part is the cost part and
Hmm.
the second part is the accumulated depreciation part.
Yeah.
In the cost, if I have the schedule of non-current assets, so first I deal with the cost part, then I deal with the accumulated depreciation part, and then I have the net book value at the beginning of the year, and I have the net book value at the end of the year.
Hmm.
These are the two things that I have to write in a non-current asset schedule. Are you with me?
Yeah.
Okay. They have already given us an example where they say they have the opening balance given to you. Can you see this?
Yeah.
They have an opening balance given to you. They have additions to land given to you. They
Hmm.
have the closing balance.
Yeah.
There is an asset, land and building, plant and machinery, and motor vehicle.
Hmm.
When I prepare the non-current asset schedule, my first section would refer to the cost section.
No.
The second section would refer to the accumulated depreciation section.
Hmm.
Are you with me?
Yeah.
Okay. I will have the opening balance, additions, closing balance. Even for accumulated depreciation, I have the opening balance. I have the charge for the year. Can you tell me what do you mean by charge for the year?
The depreciation that you charged during the year.
The depreciation of the current year. Okay.
Hmm.
And then you have the closing balance. If they
Hmm.
have already given us the non current asset schedule, why are they asking us to make another non current asset schedule?
There may be some adjustments that have been.
There may be some adjustments that have been not been recorded, or there may be something that has been forgotten to record, or something
Hmm.
or the other is the issue. That is why they've asked us to prepare a non current asset schedule. Okay.
Yeah.
So now they are saying land and building. Can you please read this?
Yeah. Land and building consists of land which was acquired in 2022 and one office property.
Okay. So I have land and building.
Hmm.
What is the cost of my land and building?
It is 360,000.
360,000. Now understand over here. Can you see this cost over here?
Yeah.
This is for which year?
2022.
What date?
1st Jan 2022.
And this over here,
31st December 2022.
I am asked to prepare the non-current asset schedule for which year?
31st December 2022. No, we are asked for 31st December 2023.
2023. So I will have my cost that is going to begin at what date?
Jan 1st 2023.
So I will have my cost that will begin at Jan 1, 2023. So this would be
Hmm.
my opening balance. So the closing balance over here would become my opening
The
balance.
opening.
So the
Yeah.
first reason I already justify that although the NCA schedule is given, there is nothing wrong in this NCA schedule. This
Hmm.
NCA schedule is of the previous year. I have been asked to prepare the NCA schedule for the current year.
Yeah.
Okay, this part is very clear. So
Hmm.
my opening date would be Jan 1, 2023, and my closing date would be December 31, 2023.
Hmm.
Are you with me?
Yeah.
Okay, fine. So I will start with what amount?
You will start with 550,000.
Okay, so I have land and building which is of 550,000.
Hmm.
This consists of what?
This consists of land which was acquired in 2022.
So this consists of land which was acquired in 2022 and one office property.
Hmm.
Can you elaborate this and tell me what is the meaning of this?
That 550,000 includes the land that was purchased and an additional office property.
Yeah, so when you read this and you look at the schedule, what can you interpret?
That mm, I don't know that cost was already included in it. That the addition of the
Okay.
land was included in 190,000 is included in the 550,000.
The reason why they are telling is that 550,000 is made up of one land and other is property. One is
Hmm.
land, one is property. Land is of 190,000. So property will be of how much? Please
360,000.
calculate.
It'll be 360,000.
How much?
360,000.
360,000. What is the reason to bifurcate between land and building? Land separate, building
Because
separate.
land doesn't depreciate.
Land does not depreciate and building does depreciate. So first information, whatever I wanted, I have acquired. Are you with me?
Yeah.
Okay, fine. Go to the next information.
In 2022, the company owned two vehicles that were acquired on the same day. Vehicle A's cost is 25% higher than vehicle B's cost.
So company owned two vehicles.
Hmm.
On 31st December 2022 year, company owns two vehicles that was acquired on the same day. Vehicle A and vehicle B. So this consists of two vehicles. One is vehicle A, yeah.
Yeah.
One is vehicle B, and vehicle A is 20% more. How much percent more?
25. 25%.
Vehicle A, and I have vehicle B, and vehicle B is 25% more. Can you give me the interpretation?
So if this is 25% more, which means it's 125%.
So
No?
135,000.
Hmm.
135,000 is motor vehicles.
Yeah.
Okay, fine. This motor vehicle is made up of two parts. It is made up of vehicle A and vehicle B.
Hmm.
Vehicle A and vehicle B. So I
Yeah.
am saying that vehicle A is 25% higher than vehicle B.
Yeah.
So if vehicle B is 100, vehicle A would be 25% higher.
Higher.
Vehicle A would be 125.
25%. Yeah.
So the total is how much? 225.
225.
So cost of vehicle A would be 135,000 into 125 over 225.
Hmm.
And cost of vehicle B would be how much?
75.
135,000
Yeah.
into 100 over 225.
Hmm.
So cost of vehicle A is how much?
75,000.
And cost of vehicle B would be how much?
60,000.
135,000 minus
75.
60,000. So the cost
Hmm.
of vehicle B would be 60,000.
Hmm.
This is because of adjustment number 2.
Yeah.
I hope you've done it along with me.
Yes.
Okay, just a minute. Try to read the
Hmm.
third adjustment.
For the year of
Say, full year's
so,
depreciation is provided in the year of acquisition and none in the year of disposal.
hmm.
Land has no depreciation.
Hmm.
Motor vehicle was there on the opening date, it is there on the closing date.
Yeah.
Both the motor vehicles had been acquired on the same date.
Hmm.
I have the cost of my motor vehicle A, I have the cost of my motor vehicle B. I've
Yeah.
just read the information and I've analyzed the question. I've
Hmm.
still not put in the schedule.
Yeah.
The schedule would look like this only.
Hmm.
Costs, opening balance, additions would be added. If there is any disposal,
Minus.
it would be subtracted. If there is any revaluation, you can add or minus in the schedule over here. And
Hmm.
if there is an impairment profit, you add an impairment loss, you minus.
Hmm.
The things that come in the asset section of a non-current asset schedule would be cost, addition. It's just like a vertical format of your account. Opening
Yeah.
balance, closing balance, purchases, sales, revaluations, and impairment profit or loss.
Hmm.
Okay. For
Yeah.
depreciation again, opening, tell me,
Uh,
opening, closing,
addition. Yeah.
depreciation on new assets, depreciation on the asset disposed, and
Hmm.
in this you will also have your charge for the year.
Okay.
Okay. Now let's
Yeah.
go ahead. So what is the policy of depreciation?
That a full year's depreciation is provided in the year of acquisition and none in the year of
Okay. Now they have given us the chart, the method that we use.
hmm.
Come on.
So land has no depreciation, building has straight line, plant and machinery has reducing balancing, and motor vehicle has straight line.
Okay. The one that has reducing balance method of depreciation, how do you calculate depreciation?
Um, we'll minus no,
From the costs,
you'll
you
minus the
subtract the
depreciation.
accumulated depreciation, what you get is the net book value.
Yeah,
Yeah?
yeah.
Okay, fine. Read ahead.
The following information is also available for the year ended 31st December 2023. On 1st January 2023, a review of the estimated useful life of the office property suggested that it should have been 5 years longer than the original estimated. On 31st December 2023, the land was revalued at 249,000.
Okay, fine. So I will just crop this part, okay? We are talking
Hmm.
about the land and building.
Hmm.
Let's see, this was the schedule that was with us, which is for land and building. Okay.
Hmm.
On the first day, I had 360,000 and there was an addition of land that I did.
Hmm.
Okay. So land was purchased in 2022 and now on 31st December 2022, I have a land and building which is of 550,000
Hmm.
total. This
Yeah.
550,000 is made up of land is 190,000 and the property is 360,000.
Yeah.
Yeah. On
Yeah.
this property of 360,000, up till Jan, depreciation that was charged was 129,600.
Hmm.
Charge for 2022 is 14,400, and on the last date, that is 31st December, my total accumulated depreciation is how much? 140.
144. Hmm.
With this information, I know one thing, that the information that is not going to change is when I am writing land and building, the cost will remain 550,000.
Hmm.
The opening accumulated depreciation would remain 144,000.
Hmm.
This includes the charge for 2022.
Yeah.
Now, what I am looking at is the charge for the year
20. Hmm.
2023. If there is any addition, disposal, impairment, that we will look into it.
Yeah.
They said that this land and building is a breakup of land and the property.
Hmm.
On land, there is no depreciation, so there is no depreciation on land. Yeah,
Yeah.
and on building, that is the office property, the depreciation will be the straight line method.
Yeah. Yeah.
Now they say on the 1st of January, that means on this date,
Hmm.
I did a review of the estimated useful life of the office property, and it suggests that my estimated useful life should be 5 years longer than the original estimate.
Hmm.
Okay, what do they suggest? That the estimated useful life should be 5 years longer than the original estimate. I don't know the original estimate as of now,
Yeah.
but I know that if we use a straight line method of depreciation per year, charge for depreciation was 14,400.
Hmm.
Yes,
Yeah.
land was revalued at 249,000.
Yeah.
What will we do? 1,90,000 was the original value of the land.
Yeah.
Now this is revalued at how much?
249,000.
249,000. That
Or
means
59.
there is a revaluation. Okay, I will write revaluation. I forgot. So it's revaluating upwards of 59,000.
Hmm.
There is no addition of land and building, no disposal of land and building, nothing related to impairment loss of land and building. I arrive at a figure of 609,000 for the costs.
Yeah.
Hmm? I want to
Yeah.
chart depreciation for the year. There is no disposal of land and building, no impairment loss,
Hmm.
no addition. Now, why I'm doing this is because I should know what am I trying to look at by reading this adjustment.
Yeah.
What do I want now to complete my land and building schedule?
The depreciation for the year for
Depreciation
your.
the year. So now to calculate the depreciation for the year, they said that initially the estimated useful life of the asset was some years.
Hmm.
Now, the estimated useful life should be 5 years longer than the original estimated useful life.
Yeah.
Are you with me?
Yeah.
And I know that the depreciation for the year was 14,400. Depreciation was calculated using the straight line method. So the formula for depreciation, if I apply, depreciation is cost minus scrap
Minus
divided
that.
by the estimated useful life. I don't know the estimated useful life, but I know the depreciation for the year per annum was 14,400. Cost was 360,000. So
Yeah.
the estimated useful life became 25 years.
Hmm.
Okay. Now I have to find out I have used it totally for how many years?
Hmm.
Because now my new estimated useful life is how much? It's going to be 5 years more. The new
More, yeah.
estimated useful life would be 30 years.
30.
But I have already used some life, right?
Hmm.
Okay. So the total depreciation that has been charged on the office property is 144,000.
Yeah.
14,400 is charged for the year.
Hmm.
So 14,400 into what years is going to give me 144,000? So the number of years that has already been exhausted is how much?
10 years.
10 years is already been exhausted. So 10 years are already over. For 10 years,
Hmm.
the depreciation is already charged.
Hmm.
Now, again, I go and read this, and they say review of the estimated useful life suggests that the office equipment should be 5 years longer than the original estimate. My original estimate was how many years?
25 years.
25 years. Now it should be 5 years longer. Yeah?
Yeah.
New useful life is how many years?
30
Years exhausted is how
minus
much?
10.
So the
10.
remaining useful life is 20 years.
Yeah.
Now my entire struggle is to calculate the depreciation for the year.
Hmm.
Depreciation for the year is costs minus scrap upon estimated useful life.
Yeah.
But now I'm changing only the depreciation.
Hmm.
Instead of estimated useful life, I have to spread whatever is left with me with the remaining useful life.
Yeah.
What is the remaining useful life?
Remaining is 20.
Remaining useful life is 20 years. So here I will take the remaining cost.
Hmm.
What is the remaining cost? 360,000
Or,
was the cost of the asset,
yeah,
144,000 was already exhausted. So the remaining value of the asset is now how much?
216.
So the remaining value is 216,000. So
Yeah.
remaining value is 216,000. 216,000 I will divide it by the remaining number of years.
Hmm.
So remaining cost divide by remaining years. So I am
Remain
going to get depreciation on land and building
as 10,800.
as 10,800. So this is the
Hmm.
depreciation on land and building. It would be my working note number one.
Hmm.
Okay. So what is the depreciation charge for the year?
10,000.
10,800, working note number one. Kindly do it again. So first you will calculate the original useful life. Then you
Hmm.
calculate the years depreciated.
Hmm.
Then you get the remaining life.
Yeah.
In the remaining life, add more 5 years.
Hmm.
Then you get the remaining carrying amount.
Yeah.
That you will divide it by the remaining useful life. You would get the depreciation for the year.
Hmm.
So with this, we've done with the land and building part. We are done with the land adjustment and the things that is related to land. Now it is something that is related to plant and machinery. Are you there?
Hmm.
Now for plant and machinery, if you're reading it properly, there is something that is related to impairment. There is something
Yeah.
that is related to a purchase of machinery,
Hmm.
and there's nothing related to disposal. Are you with me?
Yeah.
So when you're doing the plant and machinery schedule, you will have addition, you will have
Hmm.
impairment, but there is no disposal.
Yeah.
and charge for the year will be there.
Hmm.
You there?
Yeah.
So we are to prepare this non-current asset schedule. We did our first adjustment that was related to land and building, right?
Hmm. Yeah.
Then our second adjustment is related to the plant and machinery. Now, if I look over here, I will see all the adjustments that is related to plant and machinery. So I have
Hmm.
this section over here, the cost accumulated depreciation section. Plant and machineries charge depreciation on reducing balance method, and I have this adjustment that is related to plant and machinery that says that
Hmm.
there is something that is related to impairment.
Hmm.
What is impairment, loss or gain?
It's when the market value is, if it's a loss, market value is less than what your net book value is.
Value in use, recoverable
Yeah.
amount.
Yeah. Like the recoverable
How
amount
do
is
you get
less.
that
The
amount?
fair value is more.
Okay. So you compare
Yeah.
the fair value and value in use,
Value with use. Yeah.
recoverable amount with the net book value.
Yeah.
Yeah?
Yeah.
Okay. So suggested that the value, the machinery had a fair value of 7,500. Are you with me?
Hmm.
The value in use was 9,800.
Hmm.
Cost of the machinery was 24,000.
Hmm.
And the new machinery was purchased for 35,000. So when I read
Yeah.
this information, I really don't know how to do the things and how to start about. Correct?
Hmm. Yeah.
So what will we do in that case? We will look at the things that is not going to change.
Yeah.
Look at the things that is not going to change. This value on the last date of the previous year would become my opening balance of plant and machinery on the first date.
Yeah.
So I will write the 280,000 over here.
Hmm.
Similarly, for accumulated depreciation, I will write the accumulated depreciation over here. Yeah.
Yeah.
Plant and machinery is to be depreciated using the uh, reducing
Straight
balance
line.
method. It's so
Reducing.
I need to calculate the depreciation for the year.
Hmm.
There is something that is related to impairment, which I am not really aware about. But I know that the machinery was purchased at cost, which was how much? 35,000.
35,000.
35,000. That means I have purchased a machinery worth 35,000.
Hmm.
Depreciation policy is that there is,
Reducing balance.
what is a depreciation policy?
That full
Full
year
year
depreciation
depreciation
is provided in the year of acquisition and none in the year of disposal.
and none in the year of disposal. Okay, fine. Now I go over here. We did an impairment review of the machinery on 31st of December 2023. When I did an impairment review, I found that the fair value of the machinery is 7,500.
Hmm.
Value in use is how much? 9,800.
9,800. Yeah.
Cost of the machinery is 24,000.
24,000.
So I need to find the carrying amount.
Hmm.
What is carrying amount?
The this.
The value that will appear in the book.
Hmm.
Carrying amount is the value that will appear in the books, or I would say it is the
The
net
book
book
value.
value.
Yeah.
Okay. How do I get the impairment loss?
Impairment losses or The value in
Impairment
use.
loss, when impairment loss is calculated by comparing the carrying amount with the recoverable amount.
The fair value and the cost to sell.
And the recoverable amount is higher of what? Fair value
Value
or
in
value in use.
use, yeah.
Okay, fine. So higher of fair value and value in use is how much? 9,800.
Hmm.
So my recoverable amount is how much? Recoverable amount is 9,800.
Hmm.
Yeah.
Yeah.
To calculate impairment loss, if my carrying value is more than the recoverable amount, then I impair the assets, and they've told that you impair the assets, you impair the assets. That is what they've told us, correct?
Hmm.
When I have to impair the asset, I have to compare the carrying value or the net book value of the assets with the recoverable amount.
Hmm.
Recoverable amount is higher of fair value or value in
Or
use.
value in use. Yeah.
So my recoverable amount is 9,800.
1,800. Hmm.
Now I'm talking about the carrying amount.
Yeah.
I have to find out the carrying amount of the plant and machinery whose cost was 24,000.
Yeah.
This cost was on 1st of January 2021.
Yeah.
Machinery is depreciated using reducing balance method.
Hmm.
Okay. So that means the asset was depreciated in 21,
Yeah.
22, and I am in 23 right now.
Hmm.
Again, asset whose cost is how much?
What cost?
Asset whose cost was how much?
What?
24,000.
Yeah.
Went for an impairment review.
Hmm.
It went for an impairment review, and there I have to compare the carrying amount with the recoverable amount.
Yeah.
Okay, this asset was purchased when?
In 2021, Jan 1st.
1st Jan 2021. And I am in which year?
2023.
I am in 2023. That means for this asset, depreciation was charged up till when?
3 years.
Depreciation was charged for 2021. Depreciation was
2022.
charged for 2022. And I am in the beginning of,
2023.
I am in beginning of 2023.
Hmm.
Okay. So try to calculate the carrying amount for this asset that I am conducting the impairment for. I will wait for you.
Okay.
Okay. That means the asset that we are going to impair, we want to find the carrying value.
Yeah.
That means the value at the end of 2023 because we are going to impair it on 31st December 2023.
Hmm.
So depreciation of this asset was charged in 21, 22, and 2023.
Hmm.
We are going to impair this asset. So
Yeah.
this asset was purchased. This asset was purchased on Jan 1.
Yeah.
Cost of asset on Jan 1 was 24,000. Minus, I would do depreciation, and the depreciation policy is the written down value method. So minus
Hmm.
depreciation would give me depreciation of year 1. Okay.
Yeah.
Year 1 would be 2021. Year
Hmm.
2 would be 2022. And year 3 would be 2023.
Yeah.
So I will have net book value at 31st December 2021. Are you with me? Now the idea is, where is depreciation? So when I look at the question, I don't see there is anything that is related to depreciation.
Yeah.
Okay. Rate of depreciation is not given,
Hmm.
but I know depreciation is charged on which value? Reducing balance
Net,
method, that means the
net
net
book
book
value.
value. So it
Yeah.
means that the cost of the asset minus
Hmm.
the accumulated depreciation was the net book value at 2022.
Yeah.
Cost of the asset was 280,000. Yeah.
Hmm. Hmm.
Accumulated depreciation was 106,000. Yeah.
Hmm.
There was no addition and deletion. So the net book value on 1st of January was 174,000.
70. Yeah.
Jan 1, 2022.
2022.
Then in this year, I will charge depreciation.
Hmm.
So depreciation would have been charged on the net book value
Yeah. So 174,000.
into X percent gave me 26,100. This is the
261,000.
depreciation charge for the year.
Hmm.
This is what the depreciation charge for the year.
Charge for the year.
So if I do, what is the X percent? So I will do 26,100 divided by 174,000 into 100. So I get the
So
depreciation charge for the
15%.
year as 15%.
Yeah.
That means the depreciation rate of depreciation is 15%. Are you with me?
Hmm.
So rate of depreciation is 15%.
Yeah.
I am now looking at the impairment part.
Huh.
So the cost of the asset that was impaired was purchased on Jan 1, 2021,
Yeah.
15% depreciation. So 24,000 into
Into
15%.
15%.
This is
3,600.
3,600. So the total depreciation also I will keep on adding over here.
Hmm.
3,600.
600.
So net book
Which will
value
give you net book value 20,400.
year 2.
Then year two 4,080 depreciation.
15% of 20,400.
Hmm. Which
So
will give you
3060.
hmm.
Okay.
Huh. No, much is 4080.
I am
Oh,
doing
20
on my
percent.
calculator.
Yeah, yeah, I did 20%. Sorry. 3060.
So net book value would be 17,340.
Yeah.
So at the beginning
Seven.
of year 3, that means at the beginning of 2023 is 17,340.
Hmm.
Minus I will do depreciation for my year 3. Okay. So
Into 50.
17,340 into 15% is
601.
2601. So I do the depreciation for my year 3.
Hmm.
So what I'll get my net book value.
Yeah.
Net book value at December 31, 2023, 14,739, which is nothing but my carrying amount.
Hmm.
Okay. So my carrying amount is my carrying amount for the asset that is impaired.
Hmm.
Carrying amount for asset impaired is how much?
Okay.
Hmm?
14,739.
Is 14,739.
Hmm.
Recoverable amount is
9,800.
9,800.
Hmm.
So impairment loss is how much? Impairment
You know,
loss is how much?
14,739 minus 9,800, right?
Yeah.
So you get 4,900.
Impairment loss is 4939. Okay. Now let's look at the asset. Accumulated depreciation on asset that is impaired.
Hmm.
What is the accumulated depreciation on asset impaired? 3600 plus
600 plus
3060
plus
plus,
260
so 3600 plus
926.
3060 plus 2601. So when I am impairing the asset, I am actually removing the assets loss from my books.
Hmm.
When I impair the asset, I am removing the loss of the asset from my book. So the asset that is impaired, I will remove from the plant and machinery the value of the cost that I am removing and the value of the depreciation that I am removing.
Hmm.
So the depreciation that I will remove for the asset impaired is how much? Accumulated
926.
depreciation that I'm removing. So it is 9261. Okay.
Hmm.
9261 is my impairment loss. The depreciation of the asset that is impaired. First, try to digest this fact. Now, here we have to record the impairment loss. Are you with me?
Hmm.
Impairment loss is the difference between the carrying amount and the recoverable amount.
Hmm.
Are you with me?
Yeah.
Carrying amount is cost minus accumulated depreciation. 14,739 is the carrying amount,
Hmm.
and the recoverable amount is 9,800. So my
Yeah.
impairment loss is 14,739 minus 9,800. My impairment loss is how much?
14739.
My impairment loss is 4939.
How? What did you do?
It is a
You did
difference
14?
between it is a
Oh,
difference between your carrying amount and your
yeah.
recoverable amount.
Yeah.
Now I have to record this 4939 as my impairment loss.
Yeah.
I have to remove the carrying amount from my books.
Yeah.
Okay. Now, if I have to remove the carrying amount from the books, okay, I have to remove this from the book and this will go as the impairment loss.
Yeah.
How would I do it?
You'll put 14200 in the cost section
Yeah,
and
but this is the
9621.
net book value. But do I have any section for the net book value?
No. You only have
No,
cost and debt.
I don't have any section for the net book value. I have a section for cost. I have a section for accumulated depreciation.
Yeah.
There is no way I can give treatment of this 14,739.
Yeah.
So what will I do? This 24,000 cost I will remove from cost. The
Hmm.
9261 depreciation I will remove from depreciation and I will give treatment of my impairment loss.
Hmm.
Okay,
Yeah.
fine. Now if I remove cost from this cost, I'm going to remove full what 24,000, but I am still
Yeah.
going to have 9,800 still lying with me.
Yeah.
Okay, so from my cost section, what I am going to remove is the 24,000 minus 9,800. From cost section, I will remove 14,200.
Hmm.
Are you with me?
Yeah.
So for impairment loss, from the cost section, I'm going to remove how much? 14,200. From the depreciation section, I will remove 9261. So this would
Hmm.
be the costs minus the recoverable amount.
Hmm.
Okay.
Yeah.
Now depreciation for the year.
Appreciation for the year will be the one that we calculated,
Depreciation for the
2061.
year. You will take this 280,000
Hmm.
plus 35,000. Now this is no longer there with us.
Hmm.
Okay. So you will
Hmm.
take this minus this gives you the net book value.
Yeah.
And this is the first year of depreciation.
You'll
So
add it.
this will be directly on the costs.
Hmm.
So the depreciation for the year would be calculated how?
You
It's
will add
reducing balance method
one.
net book value.
Yeah, so you'll do 280 plus
280,000
35
minus, yeah, minus 132,000 and on
1,000.
the 35,000 full thing
And into 15%.
into 15%. So my depreciation for the year is how much?
2745.
27,435. So depreciation for the year is 27,435.
435.
So if I sum up the costs section for year, I have nothing in disposal and revaluation. This is 300, 800. And the depreciation for the year, if I sum up, this is going to be 150 to 74.